Hello and welcome to the Assay. Today I'm here with Peter Krauth from Silver Stock Investors. So Peter, thanks so much for joining me here
it's my
at
pleasure.
PDAC.
Thank you, Amy. My pleasure to be here.
Always great to catch up. So thought maybe we could just start, can you tell us a little bit about your background as a silver analyst and investor and really what brought you to this focus?
So I've been working and writing resource-based newsletters for about 20 years almost now. And after COVID hit, I was actually directly out of the newsletter business for a little while and sort of anxious to get back into it, and decided I was going to do that. Reached out to a former business partner, Gwen Preston, who was writing the Maven letter for a long time. And she offered for me to join up and for us to join forces and to launch a new letter. And we both had one of two ideas was silver, and saw that there was really a niche. It was an unmet need to talk about silver specifically. And so soon after that, launched the letter. That's 4 years ago now, and going strong.
Great. Yeah, I mean, definitely it does seem like I don't want to say underserved market, but it is kind of that undiscussed metal.
Sure.
Yeah. So maybe we can talk a little bit about how, geopolitics and global uncertainty, how does that all play a role in the silver markets?
So, I mean, silver is very much like gold, and it's considered its poorer cousin, but, there are different things at play. So silver is really kind of a dual purpose metal, unlike really, in fact, any other metal that I can think of. Gold is mostly a savings metal. It's a chaos hedge and an inflation hedge, and all of the other metals are mostly industrial. But silver really is both, and to the point where it's about half-half. If you look at demand, about half of silver demand, in fact, that's grown a little bit, but about half of it is industrial. That silver, most of that silver gets consumed and we don't ever see it again. And then the other half is investment. And I lump together actual investment in physical silver, like coins and bars, but then you've got jewelry and you've got silverware, which I, as a group, consider all part of silver investment demand. So that really makes it different. And on the geopolitical side and the economic side, I mean, silver is important because the demand has grown so much, especially industrially. Maybe 10 years ago, half of silver demand was industrial. Now we're at the point where 60% of silver demand is industrial. So industrial is becoming clearly more and more important. But historically, silver has been money since before gold even, so 5,000 years. And many think that because of its value being obviously a lot lower than gold for the same weight, for example, it's responsible for more transactions globally in history than gold even is. So a lot of places, and especially in the East, have a long history with silver and continue to buy it, very voraciously almost. They put their savings into it, and many think that if ever we get to a point where we're in some kind of a financial crisis and certain things break down, that silver could serve as daily currency once again.
Interesting. I mean, maybe you've started to talk about how it has this dual role and dual demand side. So could we talk a little bit more about those kind of supply-demand dynamics?
Sure. So if we look at how the demand breaks down, sort of easy, simple numbers are that there's about a billion ounces of supply of silver every year, and that works out to about 850 million from mining and about 150 million from recycling. So that makes up our actual new supply every year. And the demand is 1.2 billion ounces. So we're short about 200 million ounces of silver, about 20% every year. And this has been for the last 4 years now running that we've been short anywhere from, I'm going to say 100, 150 to even up to 200 million ounces, depending on the year. So demand is strong, supply is weak. S&P Global Research thinks that even over the next few years, we're not going to see any growth in mine supply from primary silver miners. That's something that I should actually get back to in a moment. And it peaked back in 2016. So we've actually seen mine supply from silver drop for the last decade. And we've seen demand rise.
Right.
The biggest driver in silver demand clearly over the last 10 years has been solar. So solar now accounts for 20% of all industrial demand. It's the single biggest demand factor on the industrial side. So, and if I can get back to that point from earlier on silver supply. So mined silver, if you look at how that breaks down, about 25% of it, only 25% comes from what we call primary silver mines, where the main output is silver. 75% of silver from mining comes from mining other metals. So it's a byproduct, things like copper, gold, lead, and zinc. So the interesting part about that is that those miners that produce these other metals with silver as a byproduct don't really care that much what the silver price is. It's very secondary to their revenues. So even if the silver price goes up, they make little, if any, effort. They don't really care to try and produce more silver because it doesn't represent that much of their revenues. And so that can exacerbate silver shortages. So it's interesting, the interplay that you have there.
Yeah, absolutely. Looking at kind of silver as a precious metal now, it's often been correlated with gold, and kind of pricing has been somewhat correlated.
Sure.
Can you talk about that relationship?
Absolutely. And that relationship is out of whack now, and it has been for a while. So there's something called the gold-silver ratio, which tells you at any given point in time, based on the silver and the gold prices, how many ounces of silver it takes to buy 1 gold ounce. And if you look back over, say, 30, 40 years, the average has been about 55 or 60 ounces of silver to buy 1 gold ounce. Right now, we're at about 90 or 92 ounces of silver to buy 1 gold ounce. So on that basis alone, silver is very cheap. People keep asking, why is that? And there are all kinds of factors that go into it. Nobody, I don't think, really I can't really say for sure if there's something specific to point to. I just think that right now, gold has done very well. There's been a lot of physical gold buying, mostly central banks. And gold is the king of precious metals. There's no question about that. So, everyone pays attention to what gold's doing. And then I think what will happen, and what we've seen, silver always outperforms gold in bull markets. And what we've seen is that it does that later in the cycle. I think that what drives that is this fear of missing out. And so people who are not, involved with or familiar with the precious metals industry and what's going on with these metals, at some point start to hear, because with the headlines in mainstream media will start talking about gold, let's say at $2,500 or at $3,000 and beyond. And then people will really start to pay attention to gold. And then what happens is they look at gold and they say, wow, $3,000 for 1 ounce. What other options do I have? And they see silver, maybe at that point is $40 or $45 an ounce. And they say, I can get a lot more silver for my money than I can gold. And they go out and they start buying silver, and and it's a much, much smaller market. So it really, it takes much less buying to make it move. And that's, I think, what generates the volatility, both up and down.
Yeah, absolutely. I mean, just to follow on, and actually, so looking at that kind of investment into silver, can we talk a little bit about kind of the general sentiment in terms of investing into this metal? So, what forms of investment, who is investing, and where do you see that kind of going?
Okay, sure. So, we'll start with the physical silver, that really you've got a lot of options, and that changed in 2006 in particular when the first silver-backed ETF came to be SLV, and that still runs today. It's the single biggest silver ETF, and there's billions of dollars worth of silver represented by that. What it did was it kind of changed the dynamics. People were able to get direct exposure to silver and the silver price without having to actually go out and buy any physical silver. So that's drawn a lot of the money. It still ultimately needs to go into physical silver because they buy silver to back the those units that they issue. But then beyond that, you've got ETFs. You've got silver mining ETFs. So people can go out and buy one unit of this, like a stock, and they're essentially instantly diversified in the silver mining industry. So this would mean a bunch of silver miners, really, and anything from these large cap producers all the way down to some explorers, junior explorers. And you can also invest through the individual mining companies, and you have the entire range. The largest market caps are these multi-billion, tens of billions of dollars names like Wheaton, Silver Wheaton, or Wheaton Precious Metals now. Mm-hmm. You've got some other royalty companies, but that's really the one that has the biggest silver exposure. And then from there, you've got the large producers, names like Pan American Silver, and you've got First Majestic Silver, Kerr Mining, Hecla. These are the big names in silver production. And then you have developers that are the tier or mid-tier, so smaller and medium-sized producers. Then you have developing silver companies. They have a project, they're working to bring that into production, to build it out. And then after that, you've got the explorers. Some have discovered something, some are still looking to discover something, and that really covers the whole range.
Yeah. Okay, interesting. Well, that kind of sums up all of the questions that I had for you today, Peter. Right. So thanks for joining us at PDAC, and I suppose for more information on Peter and silver, you can check out Silver Stock Investor.
Thanks very much, Amy.
Thanks for joining.